audit is a strong word, right? It's an intimidating word.
Yeah.
So the reverse audit, it's total opposite. This is a good thing. Hey, we're in there to get money back from you. If there's money on the table, we're going to find it.
Hello, I'm John Zimmerman, and welcome to Shelf Confidence, a podcast brought to you by the Pennsylvania Food Merchants Association that focuses on the trends and innovations in the food and beverage industry. Today we're talking about a topic that may not sound exciting at first, but can have a real impact on a business's bottom line: sales and use tax. Joining us is Corey Deibler, President of KeyTax, and Michael Schuenemann, VP of Partnerships and Business Development at KeyTax. They're here to explain what a reverse audit is, why sales tax and use tax can get complicated for Pennsylvania food and beverage businesses, and what operators should understand before assuming everything is being handled correctly. Welcome to the show, guys. Thanks a lot.
John, thanks for having us. We really appreciate it. We're humbled. The goal here is to really shed some more light on what we do. Our service, like we mentioned before, it's a very unique service, niche market that we have. But, the goal here is to be able to, answer questions that you guys have and ultimately deliver value to your valued members. Ironically, if I can just take a step back, the connection is with one of your board of directors, Andrea Carnes. We just recently had tremendous success doing an audit for them, and she connected the dots with Alex, who's your CEO. And Corey, myself, and Alex were all Bishop McDevitt alumni. It's a small world. So she recommended, what we did for her. And ironically, we work with a number of your members on a daily basis, whether it's convenience stores, distributors, wholesalers. So right there, we have a great foundation, to really set this off.
Awesome. Well, before we get into the nitty gritty of all this tax stuff, I'd love to know a little bit of the history of your guys' business and what's the genesis of all this?
Sure, I'll jump in there. And again, John, thank you very much for the time. This is great. We're very excited to be here, very happy to be here. So sales and use tax doesn't get a lot of attention until there's a big number on either side of the equation. So
right.
KeyTax, formerly Keystone Tax Associates, we were founded in 2005. And we were second generation from another firm that was comprised of former state sales and use tax auditors who primarily were in Pennsylvania auditors, but there was, as that company grew, a lot of other states got involved. They reached out to other industry professionals who all kind of had the same idea around the same time, from seeing what they saw as auditors for the Commonwealths, Pennsylvania, New Jersey. And we always kind of equate it to our favorite legal shows that are out there, like Suits for this generation, or Mike and I are getting up there in age now, getting close to 50. So that the Boston Legals and then LA Laws, where
Law and Order,
Law and Order, yeah, right.
Dun, dun.
All 16, right? All 16 Law and Orders, the spinoffs,
Right.
Even to like Ice-T, or Ice
the Wolfverse.
Right. So as they were doing that, it evolved. The industry evolved, the accounting systems evolved, all the things evolved, and it just really, as these companies, and including Keystone Tax, KeyTax now, as we grew, we saw more and more things out there that pretty much cemented that these people that started this were onto something. And we just basically go into companies and do a complete scrub of the payables to find opportunity, whether it's a recovery, which everybody loves, or we'll get into it where if there's things that are no-nos that we can be proactive to get kind of fixed and remedied prior to the next audit that could be coming, or just anything in general, we kind of work to get the company compliant as possible in this very subjective arena.
That makes a ton of sense. And then I get the logic of that. You want to learn the experience, work for the state, and then take that knowledge and toolbox to some private clients. Before we dive into some stories that I want to push you guys on, I'd love to get into the nitty gritty of what is sales and use tax?
Sure. So sales tax and use tax is the same tax. It's just the way it's presented and the way it's paid is the difference. So if the vendor puts sales tax on the invoice to you or I, or to the client, and it's paid that way, that's sales tax because it appeared on the invoice. However, that does, if there's no tax on it, that does not clear the taxpayer of the obligation for a taxable transaction, whether a good or a service. And a lot of the times, just to say for an easy example, that company who's selling into Pennsylvania is not registered to bill Pennsylvania sales tax. They don't do a lot of business there. I bought it in Delaware. No, no. If you bring it into Pennsylvania, there's a use
Right.
tax trigger,
Yeah.
event there where the liability still falls on the ultimate consumer of a taxable good or service in Pennsylvania to remit that same 6, 7, or 8%, depending on your locale, to the Commonwealth on a monthly basis as a use tax instead of the sale. Same tax laws apply. One, the vendor's billing tax to us. The other, we have to make the call internally, and that can open up some other, problems or opportunity there because it's a lot more of a human judgment call versus the vendor who we hope has their act together, but we'll see. That can go either way.
You always hope your vendors have their things together. I appreciate the context on that, but I'd love to push you guys for a story. Obviously, this stuff gets very much in the weeds, but I would love to know a success story or a horror story about proper use of this stuff.
I wish I could have a better word for it, but that usually gets people's attention. So the reverse audits just mean instead of the state telling you owe money, the reverse one is, oh, we're going to get you money back, right? So in the retail world, say a retailer who also operates a dairy as part of their business function. They're technically a manufacturer and a retailer all wrapped into one. So that can open up opportunities or it can also open up liabilities for two different business models for the same company. Those products can then flow to the shelves. And at the retail side, if we aren't billing tax correctly at the point of sale to the customer, the tax falls back on the retailer for that tax. Unlike on the purchases side, if say the vendor doesn't bill tax to us and we miss it on the use tax side and we're picked up under audit, we're going to just basically get hit with the tax that we owed on that one purchase and a little bit of interest and penalty. We still owe the tax no matter what. On the retail side, if we don't bill the tax the right way out the door, and Mr. or Mrs. buys our flavored drink that we had classified as regular water as an exempt thing, all the tax on all those sales for these retailer in Pennsylvania go back to the retailer because they can't chase down the flavored water purchasers all over the state, right? Yeah. So we've seen that. That's a basic example, but we've seen this where marketing at these companies want to get the thing on the shelf immediately because it's the new hot thing. Like my kids play with all these new things. It's hard to keep up with them, right? Sometimes marketing doesn't have time to communicate with tax on what exactly all items are. That's a big issue there because these things could go live, and by the time it trickles to the tax team, they could be sitting across the table from the state already. So we've seen an instance where remember years ago those star shower lights that shoot the twinkle. They still have them. Like you put them in your yard and they shoot the lights against the side of the house.
Christmas lights.
Like Christmas lights that look like you decorated the house yourself. Somebody upstairs coded those to a pharmacy product and they weren't billing tax on them out the door. That number got ugly very, very fast. Right. That was one instance there that was a war story. And then another instance too is when say systems are built on top of each other over years, right? You might have started back in the AS 400 days, green bar, work your way up, little past abacus days back where you're really lining everything up. But where if you have an older system that doesn't integrate with a newer point of sale system, and there's certain product ambiguity in there, and you're not refreshing these matrices all the time, these things can just slip through the system's crack, even if they are kind of coded correctly at one point along the way. And then once these things get kind of set it and forget it, unless you're really going back and looking at this stuff again, that gets nuts. So those are those gray areas where we kind of attack and then
we got stories for days.
Yeah.
I imagine there's a million of these. There's so much nuance to this stuff. Like it's easy to screw it up, I would imagine.
I'll give you one more. One of the states tried to assess electrolytes as flavoring in water and smart water, and we had to go to bat for that. It's not that the state's trying anything. If they don't have the right, matrix, the right coding, the right commodity codes product, like these things can get out of hand And, I like to say it sometimes, once the toothpaste is out of the tube for some of this stuff, in audit, you can't put it back in. You got to dig in and you got to prove your case.
So I
So
guess that
these
makes
things
sense
just
because, like, do they
compound.
log these things in the system and then they just get locked in the system and then they just get run through the register
Yeah.
and nobody checks it till
Yeah.
they get an audit from the state, basically?
Yeah,
Exactly.
like,
Oh,
that's all you need, a couple that you're selling and your point of sales off, and these things compound and they get to seven figures
Right.
fast. Then
Yeah.
ouch.
if your sales aren't reconciling with your payments, you're reporting to they can go in there and almost trigger a deficiency until you prove it out. And these are
Right.
all just scary things that have nothing to do really what you're buying. It's what you're selling.
No, I think that's good to know. Like, it's good to know what the cautionary tales are. Like, we all want to hear the happy ending, good stuff, but
Sure.
like, we want to avoid the bad stuff. So you gotta hear those stories, you know?
Audit is a strong word, right? It's an intimidating word.
Yeah.
So the reverse audit, it's total opposite. This is a good thing. Sometimes your CFOs, your accountants, they hear audit, what's the state coming for? Hey, we're in there to get money back from you. If there's money on the table, we're going to find it. We're going to get that back. We're going to fight to get every penny that is your money that was already spent and written off. We're just getting that back, if that makes sense. It's not always a bad thing in audit.
No,
I
I heard
just
the word
delivered
and
a
I
check.
just cringed on my end a little bit just hearing the word. I'm
Yeah.
not even at risk
I
of
mean, I
quoting.
have clients that call, they just called me. I showed up with a close to a $500,000 check and they called me Santa Claus, and they were ecstatic. So
Well, if you want to show up with a $500,000 check over here, I will also call you Santa Claus. That is fine. So I'd like to drill into the Pennsylvania aspect of this just a little bit. So, like, are there rules or situations in PA that specifically will trip up businesses here?
Oh, wow. Yes. Um, yeah. So there's two main ones in my opinion for especially for the audience here, right? In the retail side, when there's multiple, just say, brick and mortars too associated with the company, where you have a lot of, let's call it building maintenance and repairs. And that's going to include other things like landscaping, pest control, janitorial, snow removal, all those things. And each one of those things has a different view and taxability depending on what piece of equipment it is,
Sure.
what they're doing to it, how it's worded on the invoice. And, some of our convenience store and grocery store chain clients might have 30, 40 different pieces of equipment. So you might have a repairman out there who's there to keep the store cold or to keep the store clean. He's not there to break out tax on an invoice. So a lot of times when in doubt, and this is the safest way to do it if you're the vendor, the repairman, is just bill tax, right?
Right.
And wait
Yeah.
and see if there's any pushback ever. And then so now you have to go in there and look through these invoices or look through the contracts and see, all right, well, we have now these 40 pieces of equipment. Well, maybe 30 of them are exempt, or maybe 10 of them are exempt for repairs and installation. However, maintenance is taxable on all of them. Well, the person in AP and tax, unless they're looking to see, all right, is there separately stated labor and materials on here? It's just all getting rolled up into an account, right? So then you got to take it back apart. You got to look at the invoice. All right, now I have 400 stores in Pennsylvania that are doing this around all the time. It
Yeah.
says unless you have somebody looking at it, good luck. Go into landscaping. Mowing of the grass is taxable. Mulching of the beds is exempt, right? Then you got to figure that out. And then what do people who are landscapers do in the wintertime? They plow snow. Well, if they didn't know snow plowing is exempt, they just assume they're a landscaper. They're smacking tax on snow plowing, right?
Yeah.
So we are set up. Now we are trying to round peg square hole this whole thing where with outdated laws, with new age vendors. And I'll, like I said, I could go on tangents and rabbit holes all the time, but the bigger the retailer now they have third party, payable procurement systems where the vendors are uploading the invoices directly to these third party procure to pay systems, because certain big retailers don't want to process 30,000 invoices for the same thing. They want to get it digitally uploaded, and it all meshes to an old school invoice, but the state requires an invoice. I know you said Pennsylvania, stick to it, but like that Delaware River, all those vendors that are in New Jersey are still coming over doing work in Pennsylvania, and they're bringing New Jersey tax code and law with them sometimes. They're still billing PA tax, but they're using New Jersey interpretations because that's what they know.
And
And
then
it's
layer
just a
on Philly
mess.
wage tax just on
Right. And
top of it for
now,
fun. Yeah.
correct. Now go north to New York, totally different. west to West Virginia and Ohio, they're all different. But here we are in the Keystone State, and we're getting work from all these vendors, and it sets it up for an environment of confusion.
Well, I got to ask, while we're on the subject of confusion, what do you think is more confusing? Pennsylvania sales tax or splitting a check of 12 families? What do you think? 12 people.
12 people.
12 people? Okay.
12 people. Yeah. You don't have a key tax there with you. Like,
that's fair. That's fair. Or Philly wage tax, I imagine, figuring out. Yeah. I only got the 6 wings. You got the cheesecake. It's a nightmare after that.
Yeah. Well, one nice thing about the sales and use tax world, for the most part, is taxes only due once. So we just got to figure out who owes the tax and on what and how much. And once those things get kind of set, then we can kind of have some confidence in there.
Yeah, I mean, when you guys tell people that you work in sales and use tax, do their eyes gloss over? Do they give you like a little courtesy of a few minutes before that occurs?
Well, they kind of do what you just did. Is your head spinning yet?
A little bit. I'm following you. I am, but yeah, no, it gets in the weeds very quickly,
Right,
and it
right.
varies state to state, and it very quickly, as you guys have said several times, it gets complicated very quickly.
And the
Yeah.
expertise is learned over time.
Sure.
If you haven't picked up on it, this is very unique as far as even the CPAs don't want to touch it. We even have scars still on my fingers, when we started the old school way, going the boxes where they're all the way up to the top of the ceiling and just sorting through them. So we saw it, we've seen it evolve, and which is pretty cool too. We're growing with them, and there's more technology, there's innovative ways that you can really apply to get better results, in this industry today.
No, for sure. So, what are some signs that some of these businesses specifically might benefit from a closer look at some of this type of sales and use tax stuff that we're talking about? I'm sure there's some yellow flags or even some red flags that maybe get glossed over.
The tax managers and the accounting people and the controllers and the CFOs, they understand how this is. They understand how complicated it is. It's just one of these things where, are they really going to not waste the time? Are they going to put their resources towards sales and use tax, where they have income tax, motor fuel tax, real estate, property tax, other things where they can take advantage of more, let's just say more meaty issues, right? If you're a big fuel retailer and you goof up on your motor fuel, you got a big issue organically, or just, this gets pushed to the bottom a lot of times. I would say the things that we hear why they don't do this, it's they already had it, they have it handled internally, right? So we hear that sometimes. They had someone else do it, which, okay, that's a hurdle for us to get over, but we'll go in and be a second set of eyes no matter what. Some potential clients or who we haven't gotten into yet will say, well, we've been audited a while ago and it was such a small audit that we don't want to touch it or whatever. My recommendation is, if you were audited and it was a small audit, that's because you were overpaying, and you need to let us come look at it anyway. And we'll spend the time looking for nothing to make sure that there's nothing there. It's really rare to go, hey, you're in, it's less than 1%, right? And then lastly, for that, the ones who want to wait to do this until the state's auditing them, that's not really a great move either.
No.
I understand the method, but you're either bleeding money or you're setting yourself up for a big number if you don't look at it.
Could you explain a little bit about what that is, the contingency fee
Sure.
basis?
Yeah, because people are always curious, hey, are you an attorney? Are you a CPA? Are you going to charge us $100 an hour, $1,000 an hour? This is strictly 100% contingency fee. So essentially, we go in and there's no upfront costs. So when we do the audit and review, we only get paid when we recover money, John, through the Board of Appeals or the BFNR, or these are all the appeal levels at the state. So once Corey does his thing with his team, presents the argument, we get the approval, we win the claims, we get a nice check, as far as the refund check comes. And we split a percentage of the refund. So that's our incentive, okay? So we're incentivized to be able to win as much as possible on the behalf of the client because it's contingency fee based, and there's no loss on their end. We'll come in. I even tell people, hey, we'll come in, we'll take a peek. If there's nothing there, we'll shake hands and leave. Now, How often does that happen?
1%.
Ever. It really doesn't. So that's how we're compensated. So there's no
Okay.
upfront costs. And then post audit, like I mentioned earlier, you know, you can reach out to us anytime. Hey, Corey, we have this invoice here. We're not sure if we're supposed to pay sales tax on this. Give us a shout year round. So no upfront costs, and we share just a percentage of what we recover through the state process, John.
If it is an audit, we'll sit down. We help the auditor do their work. We kind of get in the middle, good cop, that thing. We keep the auditors away from our clients' staff as much as possible because these things take a while. And sometimes you got to pull thousands of documents and reconcile things. We do as much as we are allowed to do for our clients as part of that audit process to make it run smoothly. And then we can put those same overpayments that we would eventually put in play at appeal. We can provide those to the auditor, and they'll come back and give us what they feel is fair as an offset before that appeal process even starts. So it's really, really good to have us in there if you're under audit, because we've seen recently we came in late in the game and a lot of information was already relayed over that probably would have been best suited if there were other eyes on it first, because we know the way that the data needs to be presented. And then when you get into these reconciliation things, it could balloon and get ugly when you're not even talking about the true object of the purchase. Right.
I
So
work in marketing. I can appreciate how you present a thing can change how a thing is received. I can definitely
yeah.
get that. And all this talk of lawyers, by the way, I'm just like, oh my God, it's the lawyer's world. We're just living in it. It's really
Yeah.
their world.
Yeah.
Um,
And this was
yeah,
again with sales tax being so subjective, there's really no tax code out there, or there's really no manual from like the IRS that CPAs know. They like it's like this, right? Like the sales and use is so subjective, and it depends on the industry you're in. It depends on the wording on the invoice and how you're using that thing, and it's so subjective.
yeah, I thought that was funny in our back and forth as we planned for this episode that came up in the notes about how it's not on the CPA test. I just thought that was kind of a funny little nugget. I'm just like, you'd think that would be in there
And the
somewhere.
CPAs know, John, they
Yeah.
know. They
Wild.
don't want to
Yeah.
touch it sometimes. I mean, there's a reason why, and Corey can attest to this too. A lot of the CPAs and accounting firms in Pennsylvania outsource it to us because they get nervous. And they'll
Okay.
tell you there's not one question on the CPA exam around sales tax.
Yeah.
It's comical. I mean, I
Right.
have a story I can share, John, real quick. I mean, because when I'm targeting these companies, I base a lot of it on revenue, what's considered small business in Pennsylvania in our eyes, below 50 million, mid companies, anything from 50 to 500 million, and then large companies 500 million plus. However, I mean, we went into some companies with, $20 million in revenue and found six figures. So you really don't know until we, pop open the hood and really look and dive in and see what their purchases are, how many locations. It just you don't know until we really start to conduct the audit.
A check for $150,000 that they weren't
Huge.
counting on.
Big
it,
deal.
you, it makes a big deal, and they're the same ones. And I know this is, you know, they're the ones that sponsor your kids' teams. They're the ones
Yeah.
that are
True.
right there next to. We're very active in our community and
Yep.
schools around here. They're the ones right next to us on the banners and at every little fundraiser, every little league game with the banner. Like that when you give a nice return, or you fix a problem for those companies, that I mean, honestly, that's what it's all about too. On the other side of
Yeah. People
of the
remember that.
economics, right? So those, or that's as important sometimes, and it's kind of this trickle down effect too, where like I said earlier, taxes typically only do once. It just matters
Mhm.
who and the why's behind it. So there's
Yeah.
opportunity. It's not always about the recovery. It's more about compliance sometimes, and just efficiency going forward. That can The dollars are great, but the bigger companies, some of them are like, all right, $1 million. All right, yeah, great.
Yeah, right. Rounding
Yeah,
error. Yeah.
Well,
covered our
Corey, that
electric.
happened to us.
Yeah,
I have another story. One of the larger companies in Pennsylvania, I was sitting across from a CFO, and he said, Mike, listen, I know you're going to find money. You're not sitting here. Even if you find $1 million, you probably will. This isn't why we brought you in. We brought you in because we want you to be an extension of our tax team. They have a ton of other things on their plate, but we want you for compliance and support. That's the bottom line. He goes, all the other stuff, the money, that's gravy on top. But I want you for ongoing to be able to provide the guidance because it's so complex, sales tax, and it's always changing. And, that's us. We're the tax nerds, and that's where we come in.
Good. I can appreciate having, yeah, it's good to have the nerds around. I'm on board with that.
Right.
So, well, as we wrap up here, gents, I do appreciate you coming on the show, but I kind of want to look into our crystal balls here a little bit as we're wrapping up. Looking ahead, do you think sales tax and use tax compliance is getting more complex for the food and beverage industry, or is it getting less complex? And what should operators be looking to for the future?
More complex, and it'll continue to go that
I had a
route
feeling.
because of the app-driven world, the AI, the mobile ordering, the way supply chains moving, right? A couple of big things I'd be remiss to not bring up as just things to look out for, especially in the retail convenience store side. When you take stuff out of inventory and you use it internally, keep record. Saw an instance where a gas station they were pulling out the washer fluid that you and I use when we were filling up, and it was coming out of inventory, and that was a use tax issue. If you have a warehouse full of a lot of things, depending on what your business is, if you're pulling anything over into your business to consume, trash bags, equipment, you name it, computers, keep track of it. Capital expenditures now that go across state lines. If you have a centralized warehouse somewhere where you're buying your equipment that comes into one state and then eventually leaves and go to others, you got to trace it all because there could be a lot of use tax liabilities in the other states. With the M&A and the private equity world out there, that's causing a big thing on the vendor side, right? The same vendor you used your whole life might have just got gobbled up by a big consortium, and all the nice ladies in AR who you used to deal with sales tax are gone, right? Like, we got to be careful of those things. One other thing about just strategic planning as a benefit, we follow things down to our clients' vendors. If we can come in and help your vendor get their house in order to make sure they're billing tax correctly, they could actually benefit, because if they're overcharging sales tax 6, 7, 8% on a bid, and their competitors are not, they're already pricing themselves kind of at a disadvantage just because of sales tax that isn't even theirs, right? So those are certain other things that we got to look at, and especially God, the razor thin margins, right? That all the C stores and grocery stores operate on in the food industry itself, with shrinkage and loss, like 6, 7, and 8%. That's huge, right? That's an earth mover. So the people who when you hear the same, hey, we did this before, we did, do it again, do it with us. If it's not there, it's not there. But if you haven't looked in a while,
yeah,
it needs to be looked at.
I'll be quick, John. To answer your question, complex. But the good news is you have KeyTax to lean on moving forward.
I like it. Got to plug that in at the end. I like it. Well, gentlemen, thank you so much for coming on the show. I really appreciate it. This was a great conversation. Thank you to Michael and Corey from KeyTax for joining us and making a complicated topic just a little bit easier to understand. For anybody who wants to learn about KeyTax and the services they provide, check them out at keytaxllc.com for more information. Thanks for tuning in to Shelf Confidence. If you've enjoyed this episode, be sure to subscribe, share it with a colleague, smash that subscribe button, and leave us a review on Apple Podcasts, Spotify, YouTube, or wherever you're listening. Until next time, I'm John Zimmerman, and this is Shelf Confidence.